welcome to Looking at the Markets with David Moadel. I like to get all kinds of perspectives and opinions on the markets, and today we're going to get some expertise and market wisdom from Mr. Narmer Kadta. And he is the host of In the Market with Narmer Kadta. Great name, I like it. And he's on YouTube, he's on Twitter, and he's definitely opinionated, but I think he likes it that way. So first of all, welcome, Narmer. I really appreciate you joining me today.
Happy President's Day.
Oh, that's right. Yes, it is a holiday. Darn, I hate those holidays. No markets today. What do I do with my time on a day like this? I don't know. Yeah. So
I hate
it. You know the feeling. All right. So let me start by asking. We'll start at the beginning. How about that? What is your background in stocks and in finance in general?
But really, to be honest, my background in finance it pretty much started with my grandmother. I had a grandmother that taught me about like CDs and investing and buying stocks. Her and my grandfather bought, GE and Coke. Great, got dogs out there. GE and Coke and stocks like that before they really got big, and then they cashed it in. Of course, they wanted to brag about it to me, and that sparked my interest right there. But I worked for other people for a long time, bartending, serving tables, until one day I realized that the only thing keeping me from getting in the market is being scared of the market.
Right.
And so that's kind of what my video thing is about, to teach beginners that you don't have to be scared. There's simple ways to get in. You don't have to be know all these technical words and all these terms. I like to keep it simple.
Absolutely. Keep it simple. That is so true. Awesome. And now let's go to the present time. If you could tell me about the projects that you're working on currently, and also how people can find you on YouTube, Twitter, and so on.
Well, the projects I like to make, as you can probably see, as you probably have seen, I do my In the Market with Narmer Kadta, and like you mentioned, you like the name. It's a lot like the name of your show.
Yep.
And I noticed that when I checked out your channel. I thought that was really interesting. I hope that's okay with you. But the projects, I like to make the videos for fun. I record music. This is all hobby, fun stuff. When I was younger, I wanted to be a rock star. When you turn 40, those dreams kind of go.
Right.
But it's fun. It's still fun for me to do. It's a hobby, and I like to post things online. I guess I like to, if something comes to mind and I think it's funny, I'll make a video or I'll do something, or I'll basically it's just anything I think is fun. Just keep life fun, and people can one of my big projects I'm on actually is I do record a lot of music, and I have some stashed away that I really would like to get out there just for the fun of it in video form, on YouTube, Twitter, and that's also how people can contact me, is through Twitter, Narmer Kadta on Twitter. Just look me up. I usually respond to messages within a day, but really I want to direct, like I said before, direct beginners to my videos as a way to like I said, keep it simple, and they can realize that they can get in the market. They can do it.
Yes.
And that's part of the name of the show, is In the Market, because if you notice, most of the segments, not always, but most of the time, I'm actually in the market. I'm doing it's during trading hours, and I'm showing people what's going on, and then I explain, and I'll cut out for a little while, and maybe later I'll come back in and say, well, this is what happened, and this is what's going on now. So usually it's throughout the week, and I'll piece together events.
Absolutely. And I do respect the fact that you are actually trading. I tell people, and I recently wrote a blog post that says, don't listen to any stock market guru who doesn't actually trade. That is so important to me. And I like your keep it simple philosophy about it. I try to keep it simple too. Yeah. Why keep 27 different indicators on your screen? It's not going to make you a better trader. So I see that. Yeah, absolutely.
Right.
And what I will do is I will real quick. I want people to visit your YouTube channel. I want people to check you out on Twitter. So what I will do is I will put both of those links in the description of this video so people can easily check you out. And what were you going to say right there?
Well, I was going to say I actually watched a couple of your videos, and like the MACD video you did, that's a pretty good one. I really like that.
Oh,
and I think that's a simple way to educate people, you know, without using too much technical talk, and really just explaining to them how you read that, and that it's not 100% given fact that following the MACD is going to make you money, but it's a good indicator, and indicators are a good thing to really look into in like volume, momentum, and things like that. You know, it's the indicators that make you trade and make you buy and sell. You know, it's based upon indicators, and indicators aren't 100%, you know, given.
Absolutely, absolutely. And thank you for saying that, by the way. Yeah, MACD and other indicators, they are really, I feel they're just tools that we can use, but we have to make our own decisions which tools we use and how we use them. And I really like the way you do that in your videos. So let me ask you, who are your mentors, and are there any books or videos or anything like that that have influenced you?
Well, really, you know, I've always been kind of my own guy. You know, if I want to learn something, I go out and learn it myself. You know, like when it comes to like music, I taught myself that stuff. And trading, I learned it on my own. I'm not really a follower. I'm kind of my own leader.
Yeah, I gathered that from your videos. You have a more of a maverick style, and there's a compliment in there somewhere, I think. So, and nothing wrong with being self-taught. That's okay. Nothing wrong with that. So let's get to the nitty-gritty, the stuff that people really want to hear. Finding entry points for trades. Do you have any tips or strategies for that?
Well, you know, well, first off, you should always, before you even enter a stock, you should read financials, 8Ks, 10Ks. You should see if they have any convertible debt going on, or that's coming on, or if they just how many reverse splits they've done. I deal mainly in, you know, sub pennies, because to me that's easy to read and it's easier profits, but you can also get the rug pulled out from under you. So one thing to keep in mind is the 52-week lows, and like I said, if you have any diluting going on, and like when I'm in the market, I like to show people, you know, there's a bid and the ask, and you know, of course I go by, if you see a ton on the bid, I might just cut that bid off at the pass and get some shares before they do. Right. You know, and so watching the bid is a really big deal, and watching the ask is a really big deal, because it's a stacked ask. I don't like that. You know, some traders they feel like that doesn't matter, and I you know, if you read certain message boards and stuff like that, but to me, that's a big deal. If you have a lot of people slamming down shares on the ask, well, you're probably not going to get anywhere very quick. So, so like I said, overall, 52-week low means a lot to me. Right. And pretty much getting in the mix during trading hours and looking at the bid and the ask. Sure. That's really where it really is live, you know? Yeah,
absolutely. Yeah, you have to experience it, and you have to. I mean, with sub penny stocks, you have to be super careful and super cognizant of these things. Like you said, reverse splits. If you're not researching this stuff, and there's no excuse not to. There's Google nowadays. It's not like when I was a kid, you didn't have these tools. Now you could look on your phone. You could find out within seconds, have they had reverse splits? How many? How long ago? Things like that. Yeah, is the company in trouble with the government? Things like that. These are huge questions.
And another thing is patience is key. And a lot of times, you set, if you feel like you need to set a really low bid, you know, don't chase it. Some people think that they change their mind. You know, they're like, oh, they set a low bid, then the stock starts moving up a little bit, and they think, oh, I got to chase it. Well, to me, that's a big no-no, chasing. It's better to wait low, be a little bearish, especially in the penny stock market, than to try to be a bull.
Gotcha. Yeah, don't chase it. Let the trade come to you. So important. Wise words. I love it. Good stuff. Okay. Now, but we mentioned, well, or at least I mentioned being careful in the sub penny stock world, hedging your trades. I think it's necessary. Different people have different methods, stop losses, whatever. What is your method for hedging your trades against really, really big moves that go against you?
Well, I've mentioned it in my video about averaging down. Because if it starts to go south on you and you sell out, well, you've already lost some money, and losing money is not what you want to do.
Right.
So I try to encourage averaging down, being patient, and getting a better price if you need to. And like last week, I averaged down twice, and I got rid of some overpriced shares while still making a profit. So averaging down, you will make money as opposed to jumping out for a loss. Even if it's just your trading costs that you lose, you still don't want to lose.
Right. Sure. Makes sense.
Does that make sense? Right. So basically, just be patient. Go for a lower bid. Always have a plan B. Always have money in reserve to use to average down with. Because what I found, especially in penny stocks, that's a game you're going to have to learn, because 70% of the time, that's the game.
Yeah, absolutely. And it's a tough game to play. Not a lot of people win this game. Absolutely. So let me ask you, it's still early in 2017. It's the 20th of February. So how or will your trading strategy be any different in 2017 with this new administration we have now?
Oh, well, the new administration, I'm gonna be honest, right off the first of the year, everything seemed to be a little more up for me than it had been in the past. So I really can't complain. The penny stock market doesn't really go in concurrence with like the NYSE or the NASDAQ. I mean, it's a whole different beast.
True.
And so it kind of does its own thing, and we all know what that is. It's a like you said, it's a tough game to play, but you have to learn to play by the rules, and that's the rules. You have to make your rules. You have to make your plan. You have to go with it. You can't stray or be distracted from your plan, because that right there is going to get you off to a bad start right there.
Gotcha.
And that's in trading thing. But in the sub pennies, I mean, like I said, is a whole different beast. You really patience is key, and I don't think that the administration, presidential administration, has anything to do much with what's going on in the OTC.
Sure.
It may have a bearing on GM and these things that these different job plans affect, like whether or not we have NAFTA, or whether or not we have this plan, or sending people over the border to work or not. Now that's going to affect, of course, a lot of bigger companies. The OTC, to be honest, a lot of that's in the dark anyways.
Right, that's true. I field a lot of questions about marijuana stocks, and people ask me all the time, and a lot of those are OTC stocks. People ask me, is this new Jeff Sessions, the new Attorney General, how is he going to affect my marijuana stock holdings or whatever? And so it can have an effect, I think, depending on the niche, on the industry. But I totally agree with what you're saying. The politics, the government, who's in, who's out. I don't think that necessarily affects a small, let's say a Greek shipping company, something like that. Yeah, exactly. Very cool. But
you're right.
Yeah.
I'm sorry.
It's okay. One question that I like to ask almost everybody I interview and talk to, because I get such interesting answers. There's a statistic floating around that 90% of traders, especially retail traders, fail at it. They lose money over time. Why do you think that is, and can we fix this, and how?
Well, yeah, and it all goes back to patience, and traders fail sometimes they're too greedy and they wait too long. They think they're going to get rich on one trade. Very rarely does that happen. I'm not saying it doesn't happen, but they get too greedy, or they sell out too soon, or they sell out for a loss because they panic. And panicking never helps. That average down before you panic. That's why I always throw out there average down, because that gives you a better chance. And you can actually, even if you do have to lose in the end, I think it was the CHIT that I did the video on.
Yeah.
I think I averaged down to actually cut my losses down, because I looked at that and saw that it was not working out. I need to move on to something else. So, I think I may have incurred a $20, my trading costs on that one. I think I lost my trading costs on that one, to be honest. And averaging down, cut my losses down to a minimum. Does that make sense?
Yeah, and you're reducing your cost basis, and that's a really interesting approach. You know the old saying, which is almost offensive to some people: only losers average losers. Is there any truth to that, or what is your response to that?
My response to that is, they say never try to catch a falling knife.
Falling knife,
and that's when you see a lot of diluting going on, a lot of shares just getting dumped on there and stuff. But generally, when it's just simply like the way CHIT was moving at that time, I didn't see it as a falling knife, so I felt pretty safe in averaging down and cutting my losses.
Interesting.
So I hope that.
How do you tell the difference, though? Because how do you tell the difference between a bargain and a falling knife?
Well, that's a good one.
That's the $1 million question, isn't it?
That is a $1 million question. And you know what? I mean, sometimes that's just a crapshoot, but that's where patience can kind of pay off, because say you're dealing with something that is at 0.0025, okay? Say you buy so many shares of that, and you have your money in reserve to average down, and that thing shoots down to 0.001. Ay. Now what am I going to do, right? And say you decide to average down at that point, okay, it can still go lower, but if you're watching the bid and the ask, you should be able to tell if there's going to be a little bit of a bounce that you can play off of. So when it gets down to the 0.001, obviously the less movement, bigger increase in percentage.
Right.
You know what I mean? Going from 0001 to 0002 is 100% gain, but going from 001 to 0015 is only a 50%er.
Right. Yeah.
So you have to look at the smaller the price gets, you have to play off of that it's going to be a bigger percentage gain. So that's what plays into my averaging down.
Okay. Yeah, great. Excellent.
You seem to be not a big fan of the average down.
No, I'm playing devil's advocate here. I sometimes I average down. I was just it's just that if you go on StockTwits or Twitter and you tell people that you're buying more of a stock that's going down, especially if it's going down substantially, you're going to get hit with those kind of comments. Only losers average losers, or or they'll send you a picture of ramen noodles, saying here you go, buddy, enjoy. All right, so
yeah. So that's or never catch a falling knife.
Never catch a falling knife. Right, exactly. So I like your perspective. I like the fact that you're not afraid to average down when it's appropriate, when it makes sense. Very cool. Real quickly, but before we go over your contact information, I'd like to just do a little pick your brain as far as any stocks that doesn't have to be sub penny. Any stocks or companies you're bullish on right now, and which ones do you think we should probably stay away from right now?
Oh my! Well, one thing is I'm never bullish.
Okay.
I'm straight up just lying in wait. That's my main game. And basically, I look, like I said, you look for news, you look for financials. Now, news doesn't guarantee a run, but news can. Got some barking dogs.
It's okay.
But news is a good thing to look for. Basically, I like to go to certain penny stock listing sites that what has a lot of volume,
right.
What's moving, what's fluctuating a lot right now, going up and down.
Yeah.
What's fluctuating, what has a lot of volume, because that's going to tell me it's kind of like a momentum indicator in a way.
Okay, volume's real big. The bid, the ask, all these, and of course your indicators, whatever they might be. Yeah, very cool. Do you have any favorite indicators? Are you a MACD guy? Are you a stochastics guy?
I really that is one of those things. Like I say, when I'm in the market and I'm in the mix, doing everything, the bid and the ask really tells me a lot about the momentum, because I can see the volume going on. I can see the sales being made. I can see the bid and the ask. So that's really my indicator of momentum. Really, is just being in the market and watching what's going on.
Very good, sir. Very good. All right. So I went off script a little bit. I hit you with some tough questions, and you came through beautifully. All right. So. Now, if people want to contact you and tap into your wisdom and your insight on this, maybe even learn how to do some trading in your style, how can people contact you?
Well, like I said, they can contact me on Twitter, Narmer Kadta, Narmer, then space Kadta. Says Kadta. I know that's a little weird for some people, but that's what it is. And you can add me on the YouTube. It's the same thing. I'm sure if you look up my name, I'll be the only one with that name.
I know the feeling. I've got a weird spelling for my last name, so I know the feeling.
Yeah. And but like I said before, I really want to direct the beginners to check out my videos. But they are more than welcome to contact me on Twitter, follow along. More than welcome. I'd really like to hear from people and see if my videos actually help them out, or some people may have some criticism, like Narmer, you were wrong about this, or why did you say that, or because chances are I could be wrong. I could have analyzed something incorrectly, and if someone can correct me, well, that's going to help me out.
Yeah. Yeah. I like that. I like that attitude, because the so-called stock market gurus out there, they would never say that. I never hear them say, "Oh, I could actually be wrong. It could happen."
I'm not hurt.
There you go. And to be able to admit that is huge. That actually makes me more confident in someone who can admit that. That they're not right 100% of the time, because we're in a market where if you're right 65% of the time in your trades, you're doing better than most, I think. So
right. And but one thing, can I go ahead and kind of go off script here and mention something that there's something I kind of developed a long time ago. I call it the rule of 10%, and it's really the concept that if you get 10%, you should take it, because the concept is if you take $1,000, turn that into $1,100, and your next 10% increase will be more. And I think somewhere around 30 trades from there, if you have 30 or so successful, I think it's 36 successful trades, starting with $1,000 and flipping that every time, you'll end up with $10,000.
Wow. Okay. Huh.
The rule of 10%.
Rule of 10%.
You can't fail 10%.
That's some wisdom right there. If you make 10% on your trade, and if you do it, I guess, fairly quickly, why not take it and then reinvest that, put it back in? That's the power of compounding, and the power of taking profits and not being greedy. I like that. I like that a lot. I'm going to remember that.
That's not exactly what I do every time, but it's a good rule to follow for someone who's like I said, people who are beginners might be scared to be in the market, might be scared to have their money out there and not know what's going to happen, because that can be some madness right there. You know, I got $1,000 out there. Oh no. And how much am I going to get back? So if you see 10%, take it.
Yeah.
Take it. You know.
That's great. So, again, keeping it simple, easy to remember. Rule of 10%. Mr. Kadta, you are a blessing for beginners. Get on there. Get on YouTube. Check this man out. He's got free videos on there. He's offering to answer your questions on Twitter or on YouTube. Like his videos, leave comments. And Mr. Narmer Kadta, I really appreciate you joining me today and sharing your experience and wisdom with us.
David, thank you very much. I'm very glad to do this, and I appreciate it. And I hope people can learn something, and maybe I can learn something from other people. So remember, you can contact me on Twitter, follow along, find me on YouTube. And David, you have some very, very nice videos out there as well.
Thank you. All right. I really appreciate it. All right. So, Mr. Narmer Kadta, check him out. Do not miss it. All right. You heard it here first. Before he's super famous, you saw and heard him here first. Thank you, sir. I really appreciate it today.
Thank you.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.